Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's going to help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video.
What is going on, everybody? Welcome back to another dividend video. And this one we've hit on this one before, but we've never actually gone over this, and I actually got sent a direct message on Facebook to go over this one. So XYLD. Now, does that sound familiar? Yes, you're probably going to know what I'm going to call its brother or its sister, Qyld, and I believe there's an RYLD as well that we went over in kind of a comparison of them all. Now, this one we're going to go through basically itself, because this is the S&P 500 covered call ETF. Now, we get this a lot, and this is something I actually want to go over. So, covered, because I want to go over the exact definition. Covered call strategy. And this is just going to give you guys a definition of this. They're not Investopedia. Guys, Investopedia is great. They're not going to try to sell you anything. So a covered call references a financial transaction, and it's going to do all kinds of ads, but it's not going to do that. So set an income stream. Basically, you guys can read through this. What it's going to do is it's going to allow you to own basically all these stocks. Now, when I say all these stocks, let's go into the main holdings of this one. Is Microsoft, Amazon, Facebook, Google, Tesla, Berkshire Hathaway, Nvidia, others. I mean, all the big names, it seems like. Tesla, of course. And then you have an option S&P 500. August 21st, of course, is going to be another huge one, because what this one does is it basically sells options for you. Now, what do you mean sell options for me? Because 99% of people aren't going to understand what selling an option does. Is you can actually sell options to collect premium and provide another source of income if you own 100 shares, because one contract of an option represents 100 shares of that individual stock. So what this company basically does for you is owns the shares for you and then allows you to buy shares of this fund, obviously XYLD in the S&P 500 ETF version of it, and there's QYLD in all those as well. But do this one, and then you absolutely basically, it's going to pay you a dividend, and this is where the biggest thing comes into. It does pay a dividend. So when they sell these other options for you, basically, or derivatives, depending on what you want to call it, is you're going to get money in return for that, and that's where they pay the dividend. And you're going to notice here that they pay a different amount basically every single month. And again, this one has not been inception very long. Basically, it has not been on the market for very long. And so you get a range of different amounts every single month. Sometimes it's 45 cents, sometimes it's 44 cents, sometimes it's as low as 33 cents. Now, why is that? Well, a lot of times what you end up happening is the S&P by itself ends up running up, and if they're selling options, call options is what they mainly do. I believe that's actually all they do on this one, is they sell it, and then you get you get a huge portion of the profits for it. Now, of course, you're paying them an expense ratio in order to do that, but that doesn't come out of your dividend that you get. That's after your dividend. And I think that's a big misconception that people think. They think that you get your 42 cents and then you pay that. No, they actually already take their money from you. And that's a great thing, that like your paycheck. They already take that expense ratio from you, and you never have to think about it. So you're making 21 to 47 cents every single month from a $50 stock. Now you're going to say, well, QYLD is probably right around that same ratio. And you're right. So the thing that I want to do here is let's just pull it up. And you guys know that we're already going to put these two together. So $22.69 a share is basically what it closed at today, and you're getting about 22 cents a share. So you're actually pretty close, because again, the dividend's half of what the other one is, but it's half the price as well, guys. So you know, you get to choose where you're coming from there. Do you like the S&P 500 better? Do you prefer the NASDAQ? Do you prefer... That one's completely up to you, and I think you should really make an educated decision on that. So the other thing I want to do is, let's go back to XYLD, and of course, if you Google this, guys, I'm sure you guys have already done, there's a ton of different things. But Global X ETFs is the owner of this. Go through all of this, understand all of this information. You don't have to absolutely understand on 100% of. JP Morgan's another one that I didn't mention in there on it. But S&P 500 fund objective seeks to provide investment results that correspond generally to pricing yield performance before fees and expenses. All the S&P 500 buy right index. Why XYLD? Now again, XYLD has made monthly distributions for more than 7 years running. Now I don't see that, and that's something that I would want to look into when it comes down to this. Maybe they meant 7 months worth of, but maybe the company has been doing it for over 7 years. So those are things that you do look into. XYLD, I think these funds are not supposed to go up dramatically in price, and I think that's a big thing that you guys should really be looking at here. Is this price is not going to go up dramatically. It may over time, yes, but its main purpose of this fund is to give you that monthly dividend. Now, I know a lot of you are going to say, well, I can go out and do the covered call all on my own and make 100% of the profits. That's great. Do it. But that's a lot of time and effort that I really don't have time, unless it's stocks that I absolutely love and I want to own hundreds of shares no matter what. I don't prefer to own the S&P 500 at this point in time just because it's so high. Maybe if it was a little bit lower of a price, I would love to pick some up and then do some covered calls on it. So no matter what, I know I'm making money. And if it does go all the way up, because you can't lose money on a covered call, no matter... I mean, I'm sure somebody can find a way to do it. But as long as you're not doing in the money ones where you're losing money guaranteed right off the bat, you're going to be able to go out further enough. And if you guys haven't done this, check out my covered call strategy video where I go over exactly what a covered call is. Be able to make sure that it's a win-win situation in a covered call as long as it's done correctly. These guys are professionals. They've been doing it, and they're doing it at very large scales. Make sure you remember that. They're not going to lose all your money. I don't believe that's ever going to happen unless the Fed shuts down and a lot more things got to happen. So let's get right into the biggest thing here. SPY, PTY, or XYLD. Obviously, XYLD is a little bit underperforming compared to the others, but you're still getting that monthly dividend. So you can see you're just a little bit under here. So the other thing I want to do here is, since we like dividend stocks, we're going to change these. And I think this is very important to be able to go and look and, choose what fund you prefer, how they've done and stuff. So since 2014, XYLD, you're looking at it here. They're really not that far apart. Obviously, QYLD and PTY obviously is the winner out of all of these here. But QYLD and XYLD are not that far behind. QYLD obviously had a huge run because it's off of the NASDAQ. It's not off of the S&P 500. And guys, those are things to keep in mind too. Maybe you want to buy a chunk of XYLD. Maybe you want to buy a chunk of QYLD. And you want to buy a chunk of RYLD, which is off the Russell. So make sure you're looking at all of those. Make sure you're giving yourself a little bit of balance to be able to balance out your portfolio. Even though you're going all dividend stocks, you're still able to balance that out. So with that being said, guys, thank you guys all for watching this video. Please leave a comment and let me know how I can help you out and see what I can do better. And if there's a stock, just let me know.